In today's video, we learn about the bedrock of the modern financial system, the Federal Reserve. Join us as we unravel the intricacies of the Federal Reserve, its functions, and the individuals responsible for steering its course. But first, if you enjoy this video and enjoy this kind of content, please feel free to like the video and subscribe to the channel. It really helps us out. Now let's get into it. We begin by exploring the fundamental role of the Federal Reserve. Established in 1913, the Federal Reserve, commonly referred to as the Fed, is the central banking institution of the United States. It wields immense influence over the nation's monetary policy and plays a pivotal role in ensuring the stability and prosperity of the financial system. At its core, the Federal Reserve is the steward of the nation's money supply. It employs a spectrum of tools, with the manipulation of interest rates being one of its principal instruments. The Federal Reserve holds the power to influence both short-term and long-term interest rates. It wields its authority to stimulate economic growth through interest rate reductions or to combat inflation by raising interest rates, thus discouraging borrowing and expenditure. Turning our attention to the custodians of the Federal Reserve, we encounter a unique and multifaceted structure that governs its operations. At the apex of this hierarchy sits the Board of Governors, a distinguished group of 7 individuals based in Washington, D.C. These members are appointed by the President and confirmed by the Senate, serving a staggered 14-year term to ensure continuity and independence. However, the Federal Reserve's decision-making prowess truly shines through the Federal Open Market Committee, or FOMC, comprising the 7 Board of Governors members and a selection of 5 regional bank presidents. This formidable committee convenes regularly to make crucial determinations regarding monetary policy, including interest rates. Having established the governing structure, we now delve into the essential functions that the Federal Reserve executes daily. Foremost among these functions is the supervision and regulation of financial institutions, a cornerstone of financial stability. By ensuring the soundness of banks, the Fed plays a vital role in averting financial crisis. Equally significant is the Federal Reserve's responsibility for currency issuance and management. The Federal Reserve manufactures and distributes physical currency, guaranteeing an adequate money supply to meet the nation's requirements. Additionally, the Federal Reserve operates a pivotal system that facilitates the clearance and settlement of financial transactions among banks, a cornerstone for the efficient operation of the financial system. The Federal Reserve's unique attribute is its independence, essential for its effectiveness in safeguarding the economy. Its independence is manifested through the long tenures of Board of Governors members and the requirement of specific justifications for their removal. This insulation shields the Fed from undue political influence. Another facet of its independence lies in its funding mechanism. The Federal Reserve generates its own revenue, predominantly from interest earned on government securities, ensuring self-reliance and autonomy. To conclude, the Federal Reserve stands as a complex institution with a pivotal role in the U.S. economy. It orchestrates monetary policy, supervises the financial sector, and fosters financial system stability. Its independence and unique structural framework empower it to make decisions guided by the long-term economic welfare of the nation, unaffected by transient political pressures. I hope that this discourse has been illuminating for the essence of the Federal Reserve, its functions, and its custodians. If you found this video enlightening, kindly show your support by liking, sharing, and subscribing to the channel, and we'll see you in the next one. Thank you.